The S&P and NASDAQ hit all-time highs today, and so did my portfolio. But some people that are reaching out to me are not celebrating. They're asking me, is it time to stop investing? Lisa, are you still investing at these all-time highs? Yes, I am. I'm sticking to my plan, definitely when it comes to my 401k, but also when it comes to accounts that I'm managing more hands-on, like my Roth IRA and taxable accounts. If you enjoy investing conversations like this, make sure to like, subscribe, and hit that notification bell. This is what we do over here. Stay calm, patient, realistic, and investing strategy into ETFs, blue chip stocks, making sure we're sticking to a budget, having an emergency fund, all of the pieces needed to have you on track to build wealth. We've been seeing this momentum. The market has been climbing for nearly 9 weeks straight now. Things are not perfect. We're still seeing headlines that could make us feel uneasy, but I'm not sitting around waiting for a pullback that may not be coming soon. I've been investing on the way down and on the way up. Like I said, sticking to my plan, but I'm a person who does buy the dip. I do go heavier when I see a price that I like that may not be coming around again for a while. I'm still in the building phase, and so I'm not going to stop investing for months at a time. The market doesn't wait for everything to be comfortable. It moves while people are nervous, and that's when consistency matters. I've seen my investments hit all-time highs over and over and over again over the last few years. Thankfully, I'm invested into things, funds, as well as individual companies that have been moving up over time. Let's take a look at some of my actual results from my portfolio. As I said, the S&P 500 is one that I invest into. It hit an all-time high today of $7,568.72. And so my ETF that tracks it, VOO, also hit an all-time high of $694.29. I'm up about 59%, and my average cost is $436. VTI tracks the total U.S. stock market. It hit an all-time high of $371.92, and I'm up about 68% on this position with an average cost of $220. And then over at Fidelity, my mutual funds also hit all-time highs, both FXAIX and FSPGX. Across the board, I'm seeing my investments thriving, buying and holding paying off. When it comes to FXAIX, I'm up 65.44%. It also tracks the S&P 500. And then FSPGX, the Fidelity Large Cap Growth Index Fund, also hit a high, and I'm currently up 11.58%. Looking at the companies that are the biggest drivers of these funds, we can see what's pushing these investments higher. The biggest driver is AI spending and big tech. Companies like Microsoft, of course, NVIDIA, Amazon, Meta, and Broadcom. They're pouring billions into AI infrastructure, data centers, cloud computing, and those chips. And we're still early in the growth cycle for some of these big names. So my ETFs and mutual funds have me covered. So when big mega cap tech companies run up, my investments benefit. Some other factors that also help the stock market today are the oil prices cooling down after reports of an extended ceasefire between the U.S. and Iran. The markets like news like this. News like this often leads to that boost to those tech names. So I'm definitely covered when it comes to big tech, but the little guys contributed also because VTI gives me exposure to large, mid, and small cap stocks. And several of those names are hitting highs also. So I have exposure to the entire stock market, growth-focused investments, as well as sector-specific like SMH, which we didn't get into today. But I'll tag some videos at the end that you can take a look at. But what we looked at today are some of my core, basic, diversified investments, well at night investments, ones that you don't have to guess what sector, what companies to pick. So yes, I'm still investing. I'm still building towards my retirement. I'm not at the end of the road yet. These headlines are not going to stress me out. I'm going to keep on building, always having some of my investments automated to make sure that I'm staying consistent. And when there is a pullback, I go in as heavy as my budget will allow for. No one knows exactly how long the market will continue going up, but I'm not waiting for the perfect entry. If I look at your portfolio in 2030 or you look at mine, I'm sure none of us will care whether we caught the bottom back in 2026. I'd rather just stay consistent, keep on building investments that have proven that they always recover. I'm not going to be afraid and have the market climbing and leaving me behind. Inflation, recession fears, interest rates, global conflict. We're living through it all, and yet we're having all-time highs over and over again. So that shows us that that doesn't mean that the market is going to stop moving. Corrections happen, red days happen. Sometimes the stock market is extremely volatile. I'm a long-term investor, not here to predict every short-term move. I'm focused on holding strong companies, ETFs and mutual funds that give me exposure to those strong companies, being patient, understanding the process, and being on track to continue to build up my portfolios. So I hope you're doing the same, staying invested, not interrupting the power of compound interest. Just buy and hold, automate a portion, stay focused on the long term. Now, I want to hear from you. Are you still investing through all-time highs? Or have you been waiting for a pullback over these last 9 weeks? Share your strategy. Leave me some comments and questions. I hope you enjoyed this video. If you're not already, subscribe, like, hit that notification bell, hype this video. Ready to open a new account? Use my referral link for the MooMoo Investing app. Click on the link, get your account funded. You'll get 8.1 APY on your uninvested cash, great research tools, a place where you can DCA and be on track to make sure your money is growing. Thanks for watching.